Good afternoon, everyone. Welcome to Banao Bharat's Trading for Living Wednesday live session. Time is now 3:10, another 20 minutes to go. And this is how the Nifty chart is looking today. Nifty, yesterday, if you see, it had gone up to 18,429, which means from the Monday's low of 18,195, we have traveled up to 18,429, and from there on, while towards the end, there was some amount of selling pressure, and yesterday being Fin Nifty also had actually come down. Along with that, had also brought Nifty as well as Bank Nifty slightly to the lower levels. So Nifty ends yesterday on a weak note at around 18,358 after having made a high of 18,429, and in continuation of yesterday's fall, today it gaps down and opens at around 18,284. But surprisingly, looks like that gap down completes the down movement that started from 18,429, because if you see from 18,284 in the first candle in the morning, it went all the way up to 18,394. Yeah, one important observation is it has made a lower high. Yesterday's high was 18,429 and today it stops at 18,394, below 18,400. So on a daily chart, when you see, it is somewhat clear, it is like making a lower highs now. So this lower high pattern may convert into excuse me, this lower high pattern may convert into the sell signals in the coming days. On the intraday chart, there was some amount of weakness that could be traded at around 18,284, which happened to be morning's low. You can see here it did actually come to that level from the highs of 18,394 all the way up to 18,284, which means about 100 points. So about 100 points it has traveled down, and it has traded around this level for last half an hour, and currently trading at 18,301, slightly above the breakdown level of 18,284, currently trading at 18,301. So this is with respect to the Nifty chart. Monday it opens nicely, goes up all the way up to 18,429. Yesterday itself there was some amount of weakness towards the end. The closing trajectory was looking very much down with severe red candles and good volumes also. Today, in continuation with yesterday's fall, it opens lower, but it also continues to move up and makes a lower high. After that, it is trying to come down back into the zone of 18,280 to 18,300 levels and trading around these levels. And you can also see again towards the end of the day there is good volume also with the big price candles. So two things are satisfying actually. Big price candle is there, red one, and touching the breakdown level, which is an indication, yes, in the coming days there might be more of sell signals that will be coming out of Nifty on intraday time frame. And also it is accompanied with good volumes. You can see here the entire day's volume has been crossed. Today it is around 7 lakh shares traded at these levels at around 315. So generally we know opening and closing movements are very important because they form very decisive candles as well as decisive volumes. So whenever there are decisive candles and volumes, those are the ones which we need to keep in our mind for next course of action. Whenever a big candle happens and with big volume, what levels it had tried to cross over, and based on that the next course of action can be deciphered in the market. So this is with respect to Nifty. Let us also see the Bank Nifty chart. Bank Nifty, again Monday morning we see the low of 43,700, and from there on it doesn't make much of an up move, 44,080. Monday morning Bank Nifty and Indian stock markets open for the news of demonetization or removing of 2000 rupees currency notes from the circulation. So we knew, like, we saw Bank Nifty not responding in a very high positive manner, but again it was not in any big negative also. It was, I would say, like, kind of sideways to slightly on the lower side. But yesterday we could see, like, it tried to make some comeback, made a high of 44,080, topped out below 44,114, which was the recent high. Okay, this is when did we 44,000 see the 44,114? I remember 44,114 was one of the recent highs that we had to keep in our mind, and 43,500 levels was another lower level which we had to keep in our mind. Yeah, here we see on May 16th it made one significant high at 44,114, and from there on it came down all the way to 43,465. From there on it is oscillating within this broader range of 44,114 to 43,465. We can see multiple highs and lows in these many days, and all are kind of, like, not signifying anything much. It was 44,057, 44,080. In between we have two lower highs, 44,016 and 44,000. Yeah, so what was this high? Around 44,000 levels. On the lower side again, like, we have one major low that can be traded at 43,465, but after that if you see there are higher lows, 43,524, 43,700, and today we are taking out 43,700 also. Probably even in Bank Nifty maybe some amount of selling might set in the coming days, because looks like, 43,700 could have been or should have been sustained, though there was today support at 43,758. It has taken out 43,700 also, but it is now not trading way above 43,700. It is just trading around 43,700. It is 43,725 now. So I would say, like, Bank Nifty is also getting slightly weaker. This is the Nifty chart. Nifty also hovering around the day's low of 18,284, but there are certain lows at 18,200 which needs to be taken out. Only those levels, when multiple days lows are taken out, is when we can say with confidence, yes, the up move is over, the pullback is over, and now we can comfortably look at the chart slightly in a inverted manner, so that, like, there is going to be more of sells and less of buys. But as of now we cannot take any decisive call of where the market's next move would be, but definitely there is big struggle at the top. That much we can witness. Markets are not ready to fall, and at the same time they are not ready to go higher as well. So this is the kind of consolidation phase. It's been more than 10 days that it has been consolidating. We have been spending large part of May. If you see May's daily chart, large part of May we are within a trading zone. You can see here, from here, this is the May. After that we see a low of 18,084, and we are seeing a high of 18,473, currently trading at 18,300. So it has been, like, today is what we are talking of, May 24th, which means whole of May, almost out of 24 days, maybe if you take out the weekends, then around 15 to 16 trading sessions we have already spent in a very narrow range. So this has been one of the longest consolidation, I would say, in the recent times. Let us also see Bank Nifty on the daily time frame. Bank Nifty made one low at 42,630. From there on it has started moving higher, but you can see here the range of around last 8 to 10 days. Last 8 to 10 days we have been witnessing some amount of sideways movement. So on the whole, tug of war is visible in the market. So I would say, like, keep your positions light, do not venture into big trading positions because trend is not yet decisive. Of course the trend was up and it is still not shown any signs of downward reversals. It is could be a consolidation and maybe second leg of up move might start anytime soon. So this consolidation will decide which side the market will be going further. Until then, play in the shorter time frame. On the longer time frame, there are still no visible signs except that you have to wait through the consolidation phase. If you are already long, maybe we are very close to the stop loss. If the stop loss is taken out, just exit with good profit. When it comes to the shorter time frame, probably you can trade few of the buys and sell signals, and because it is a shorter time frame, how you allocate your capital for shorter time frames also matters a lot. Overall, when you have X amount of capital, you need to allocate your X amount of capital to various different time frames. There are people who allocate based on different strategies. Well, I use only one single strategy of trend following. So across all time frames I use the same strategy, but depending on the time frame that I need to play, I will allocate my funds according to the time frame. So nothing wrong in either of the approach. Both the approaches are fine. As long as any approach that is working fine, you just stick to those approaches. In stock market, there is nothing right, nothing wrong. Everything is right as long as it is working for you. So for me, I have always found, like, I allocate about 25% to 40% of capital towards intraday and rest of the capital for positional trades. I don't trade much of stocks. Sometimes stock options, yes, and that too on the naked buy options, either on the call side or on the put side, depending on some major trigger based on the futures chart in those stocks. But otherwise, I would prefer to spend large part of my time and focus energy on the indexes, mostly Nifty and Bank Nifty. Yes, of late I have started seeing Fin Nifty also, but I have allocated a very small capital for Fin Nifty allocation trading. So the game is, like, we all know, most of us work about 65 to 70% probability. So when we have a strategy which is about 65 to 70% of probability, how we allocate our capital also plays a significant role. Not just the risk management. Risk management comes into picture once you are inside a trade. But while entering into a trade itself, your capital management or money management skills are very important, so that you know how much to allocate for an intraday, how much to allocate for Nifty, how much to allocate for Bank Nifty, how much to allocate for Fin Nifty, and in future, if you want to trade Sensex also is coming into the weekly options segment. So you need to allocate based on the counters, based on the time frame, or based on different strategies that you have. Find out a ideal combination for yourself for money management purposes. If you have proper money management purposes, methodologies, then there is that much more chances for you to survive in the long run, and eventually your 70% success rate strategy will definitely give you good returns. If you want to know more about trading, and if you want to learn more about trading activities, do contact us on the number that is being displayed. We are here to help you. Not that we can teach you any holy grail, there is no such holy grail in the system, but then definitely we can give you a perspective on how to become a good trader, and that itself is something very significant because not many trainers or not many coaches are offering what we are offering. Having said that, let us all once again meet tomorrow morning with a fresh perspective on the market. Until then, Om Swasti.